So anyway, quick question that we wanted to start with today, which is good. Now this, let me kind of preface it with, there are so many different rabbit holes we could go down right here. So we're not going to cover everything, just a handful of ideas or ways that this can be done. So the question is, how do I produce income from my investments? So if we're trying to live off of it, trying to produce income from the assets that we have, the investments we have, what are ways to do that, and the good and the bad and things to be aware of?
Yeah.
Again, these are just some of the options. So let's start with products. So when we say investments, there are specific products that are specifically designed to generate income, right? They do other things not very well, but they potentially produce income very well. And so, John, what are a couple, there's quite a few out there, but what are a couple of specific products that generate
income annuities come to mind, but I know Isaac is a little more, he's kind of on top of this stuff pretty good, but yeah, income annuities where basically you give your money and you're specifically trying to get the highest income rate you can get, which a lot of these products can give very good interest rates. The negatives, of course, are, and I always tell clients if they choose that path, once they put that money in, it's gone forever. It's kind of what I tell them.
Yeah, it's like a pension. You're creating your own pension. You're giving up the potential asset growth for the higher income that it's producing.
Yeah, and we've seen over the last several years the income benefit numbers are pretty darn good. I mean, I started my career, and I'm not kidding. We had a company that gave 5% for life was their income guarantee, and it was the highest on the market at the time.
Yeah,
this is 25 years ago, and that was good. That was considered good, and people liked that. And of course, nowadays you can get much higher.
You can get quite a bit higher.
Isaac?
Yeah.
I mean, you get a little better than that.
I mean, there's statistics. They're all put out by annuities companies, so I don't know which ones are true. But it's like it'll say, retirees who have guaranteed income in retirement end up spending twice as much as those who don't because they're not in fear of making their assets last. And I think there's probably some truth behind that.
Yeah.
There's
income's coming in.
Income's
guaranteed
coming
for
in.
life.
I don't have to worry about it. I like to say, it puts less of a strain on the investments to have to perform because you know where stuff's coming from. Not to turn this into a annuity sales webinar.
Yeah.
But there's a lot of benefits to it. On the downside, like you were saying, they're a horrible product if you want to leave something to kids.
Yeah.
Because the purpose of it is you're going to give this money, they're going to send you monthly income, and if there's something left over, great, but probably not.
You got to make sure you have plenty of liquidity outside of it because you don't want to try to dip into that for liquidity needs. So that's the income annuity side. There's now I'm just going to kind of shotgun style start mentioning a few options. One thing that's really blown up in the last few years in the product space, if you consider ETF products, the covered call ETF world, it's completely blown up. There's some really bad ETFs out there that show crazy high dividend yield or crazy high yields. But I'm just throwing all the things out there. I'm not saying they're all bad. There are some better ones out there that if you're trying to produce a higher yield, higher level of income, there's some covered call strategies, whether it be ETFs or you're doing it in an SMA, but you're using options, selling options to produce higher income. But just like the annuities, there's downsides, right? A lot of these ETFs have horrible total return performance. A lot of the income, is in a lot of ways just kind of a return of your principal. Yeah. And how they're showing that really high yield. But it's something to consider. We've used some of those in the past, and it's not that they're all bad. Just definitely know what you're getting yourself into. Just like the annuity, know what you're getting yourself into if you're trying.
Well,
to
and it's hard. I'm going to tell you something. I know you're going to shotgun approach, and I'm ruining that for you.
No, you're good. Go for it.
So, but I have an example of a client that called me one time, and a reputable investment magazine. I won't say the name of it, but reputable investment magazine. He had read an article. There's 3 different ETFs that you must own in retirement for income, right? Must own. And he gave me the symbols, and I researched them, and I didn't necessarily like them that much, and I didn't, and it was, again, like those, what you're talking about. We bought them. They are basically went half of the value. So if you bought them for $10 a share, they went down to $5 a share within like a year. Now, the yield was fantastic, but you lost half of your money that you put in, right? So to your point,
you got to be careful.
Yeah, it's a reputable magazine. Said all this stuff.
The sticker price on if it's like, hey, this is producing 15-20% payout. It's like, the old adage, if it sounds too good to be true, it probably is.
Most of the time it is.
It probably is.
Yeah.
So, so you have covered call strategies. You have kind of your more traditional approach of like buying dividend-paying stocks.
Yeah.
Right. Buy some companies that produce a good dividend. It's, in a perfect world, that's not a horrible way to do it. If you can find a good dividend-paying company, you have opportunities for continued, growth and appreciation in the position itself while it continues to spit off income. Downsides, there's pros and cons. There's ways that can go bad. Just
dividends can be cut, stock can get hurt. Yeah, on and on.
You can invest in interest-bearing positions. You can which is going to get tougher as interest rates start to come back down. But there's all kinds of ways that you can produce income. You can go buy real estate, right? Yeah. Buy cash flowing assets to, hey, I'm going to take this capital and buy an asset that's going to spit off income. And real estate can be a great way to do that. So there's no right or wrong way. Typically, if you're trying to, especially let's say you're a retiree, near retiree, if we can have income, like I always hesitate to say guaranteed, but if you can have steady, stable, predictable income coming from multiple places, 2, 3, 4 different places, whether it's Social Security, real estate, income annuity, dividend portfolio, whatever it is, and you're not overly dependent on one source, you're generally speaking, that's a pretty good spot to be.
Yeah. And we talked about this a little bit before we started, but dividend are taxed at ordinary income rates. And so if you're in a high income tax bracket in retirement, it might make sense to find some sort of stock that doesn't spit off a huge dividend, right? And try and sell some stocks to be in those capital gains rates.
Right. Yeah, capital gains rates could be much lower than the dividend rate that you'd be paying.
So maybe you're selling and you're filling up a bucket of cash, and that's what you're living off of.
Or just know the dividends what kind of dividends that qualified dividends can be taxed at the lower capital gains, but ordinary dividends, are taxed at your ordinary income. And you're exactly right. Like some people get so fixated on, I want dividends. I like the idea of like, this is going to send me a check every month or every quarter, but depending on your tax situation, you might be better off just investing, letting the whatever you own appreciate, realizing a gain, especially if you can hold that. If you can hold it for more than 365 days and be in the long-term capital gains bracket.
We saw that a lot here in the past couple of years with interest rates being so high. I mean, a lot of people that I've met with were just taking advantage of their savings account, paying 5%.
Their interest income is a lot higher.
And so they're thinking they're doing the right thing, and for them, they probably were. Just taking that, guaranteed from the bank interest rate. And instead, they could have deferred into something that was capital gains in a lower tax bracket. And so making sure you're minimizing your tax.
There's a lot of things that go to take into consideration, right, when you're starting to look at how is this taxed.
Best part about all this conversation is that if you have an advisor, if you have a planner, all of this stuff can be on the table, and you can find out the best solution for your situation, depending on your tax bracket, depending on how you want to invest, your risk tolerance. I mean, everything is considered, and you can, like you said, you can build a diversified portfolio, which is really smart, of different ways to get income, but you also can protect yourself from taking too much risk. Like I think, and to your point, the person that gave me that list that got from a reputable magazine that said this is what you need in income. He would not have bought those. He would not, and I did not want to buy those, by the way. But the point is, we bought them outside of our normal planning, and they went down in half. Had you known that, you wouldn't have done that, right? So, a lot of times, if you can actually sit down and sometimes we just take orders from clients, but for the most part, when we plan properly, you could build out a really nice portfolio and let us help you do that.
Well, I'm going to try not to go on a tangent here, but whether you're thinking about how to solve for income or anything else, I think always starting with and accepting the fact that there are ways that this, whatever you're considering, every option has a scenario that it doesn't go well. And like being true and honest with yourself about how does this, because everybody's going to talk about all the ways it's going to go right. Right. Whether it's your advisor, your friend, your buddy, whoever. But it's like, everything has this, every option out there has the scenario of like, what does this look like if it doesn't go well? Maybe it may not be catastrophic, but it's just like, what is kind of the worst potential outcome?
And you might start with that.
Always start both
with
sides
that.
of the coin, because
I agree.
Because a lot of people get fixated on or have the expectation of like, well, this is done well for the last 5 years. Or
Right.
this has gone well,
Right.
so that means it's going to continue to do well. And so you just have to know what you're getting into, because every option we listed has some really good upside, really
Yep.
good benefits, the reasons that you would do it, and then every one of them has reasons that you wouldn't, and
Exactly.
that you should, reasons that a lot of people might need to stay away from that particular option.
Yep.
So just, take everything into consideration. So anything else on, producing income from your investments? We kind of kept it pretty high level there.
Yeah.
But anything else you guys want to mention?
No. I think it's about planning.
Yeah.
Absolutely.
In this episode, the speakers discuss annuities. Any guarantees apply only to contractual obligations of the issuing insurance company. All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business. The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC.